Hey, so I want to take this video and have a quick discussion about dividend growth and how we should look at that for long-term investing, specifically for like the cash flow that you're expecting to have later down the road in retirement. Because right now you can see my portfolio here. By the way, if you're new to the channel, I'm a Canadian dividend investor investing in primarily Canadian dividend stocks on the Toronto Stock Exchange, using Wealthsimple Trade to buy and sell those stocks, and tracking everything in this custom Google Sheet. So normally what I'm looking at is my portfolio average yield. So at the moment it's 4.10%. And because I have a stock value of about $50,500 approximately, basically if you multiply that by the average yield, we're going to see that I'm getting around $2,067 per year. But this is actually based on my trailing 12-month dividend, so it's a little bit of a conservative estimate for this exact moment, because for most stocks, the forward annual dividend yield will be a little bit bigger, providing that the company is actually growing their dividend. But most of the companies I hold do that over time. And for that reason, what I can actually expect in the near future is probably a little bit bigger than this number that we see here. But if you kind of project that far into the future, like what if they continue growing the dividends, like 5 years from now, or 10 years from now, or 30 years from now, and that sort of thing? Like what can we expect this number to be? If I stopped buying stocks today and I just like held everything as is, what would this number be in 30 years? That's something actually that's worth considering. Just, I guess, before we jump into that, just to give it a little bit of perspective, let's take a quick look at where this number comes from. So if we do look at my portfolio, we can see I have a whole bunch of different positions in here. These are all 33 of the different companies I hold. Almost all of them pay a dividend except for these last three down here. But the rest are paying dividends. You can see the annual dividend here, but mostly we're actually interested in the dividend yield. So I have them sorted right now for the biggest yields first, and then in descending order, just to kind of, give them a bit of a comparison between each of the different positions, but also based on the amount that I have in my holdings, the actual amount of cash flow that I'm going to get from each of these varies quite drastically. Some are $150 or almost $300 per year, whereas others are more like under 10. But all together is really where we see this value of about $2,067 at the moment for annual passive income. But I was actually doing some digging into the dividend growth rates of the individual stocks in my portfolio, and it seems like the average is around 4% per year of dividend growth. So really what's going on is as the stock value increases for each position, they're generally going to follow that with an increase in yield, or vice versa. An increase in dividend payments. And then that kind of balances out to usually be, something somewhat similar. It's not true, but like, if it's 4% now, and then my stock value all rises to a value that's higher than that, there's a good chance that they're going to increase the annual dividend payments, or like the quarterly or monthly payments. And it's still going to work out to be something moderately close to this. But that basically means, as the stock value increases and as the payments increase, even if my yield stays pretty stable, then my actual annual dividend income is going to increase without me even depositing more money and buying more stocks. Hopefully that makes sense. Let's take a look at where you can find some of this information. One website is digrin.com, and let's go through this one first, and then I'll show you another one after. I've just used Toronto Dominion Bank as an example for their TSX listing. Basically, I'll just skip through all of this stuff and just come show you exactly what we're here for. Down here, we have the dividend growth rate, the average growth rate. So this is like the annual rate per year, averaged out for the last 3 years. According to this website, is around 9%, give or take. It changes a little bit whether we're looking at 3, 5, 10, or 20 years. And it also changes a little bit if we go to a different website. So do take these with a grain of salt. The way that people calculate things can be like a little bit different. The methodology can be a bit different. For example, if we come to another website called wallmine.com, this is another great source for kind of checking out information about stocks. And if we scroll down here a little bit past all this other stuff, we got some information down here about the dividends, and their 3-year dividend growth is, again, a little bit, it's around 9%, a little bit smaller, and their 5-year is a little bit smaller as well. So these are different numbers, 8.58% and 7.72%. That is not exactly what we see here, but we kind of get an idea for it. You could actually go and do the calculation yourself with your own parameters and limits and kind of figure it out. But generally, if you're just kind of skimming around, these are pretty good estimates. I actually imported, most of the information from my whole portfolio using the 5-year growth from Wallmine, and that's kind of where I came up with my average portfolio dividend growth of around 4%. So anyways, we're going to take some of these numbers and let's just drop into a spreadsheet and kind of see what we get, projecting very far into the future, what these holdings, not buying any new stocks, would generate later down the road. So I'll just make a new tab for this. First of all, let's copy this income, $2,067, and we'll just make a new tab here, and we'll just paste this in as basically, actually we can just type it, $2,067. So this is how much money I earn right now. Let's increment this for years into the future, and let's go down all the way to, I guess, let's go 30 years from now, and this will give us a pretty good idea of what we can expect, a few decades in the future. So I'm going to just write here also my dividend growth rate, my average portfolio dividend growth rate, and obviously you can do this calculation for yourself and change these numbers as needed. But pretty much all we have to do, it's like compounding interest, you just go equals this times 1 plus this, and there we go. You could have also just written this as like 1.04 and not as a percent, but not to confuse you guys, we'll just leave that as a percent. So basically this is just 4% bigger than the previous. So after a year, if everything goes kind of as expected and my dividend income grows by 4% without me buying new stocks, next year I could expect about $2,150. So that's awesome. Let's drag down the formula a little bit, and before we do that, we just need to add in some dollar signs here to lock that cell, and then we can go ahead and drag down all the way to 30. Okay, so let's take a look at this. We can see that after 10 years, my income from these stocks that I currently hold, I can hopefully expect to get, over $3,000 per year from them, which is a bit more than what I'm getting right now, which is pretty much $2,000. That's pretty good. 20 years from now, I can be expected to get $4,500, and 30 years from now, these stocks that I currently hold, if everything, doesn't change, we're looking at about $6,700. Now, if you have a higher dividend growth rate, for example, maybe 5%, then again, these numbers are going to update, and we're going to be looking at almost $9,000 per year, 30 years from now, just from these positions or holdings. Now, what I actually do is I continuously invest more, like buy more stocks with my own money, and I also reinvest the dividends. So this is actually not including dividend reinvestment or more contributions. I just wanted to show you like how when I talk about how I earn $2,000 right now, that this is just growing by itself. These $2,000 will grow into $3,000. It will grow into $9,000 per year. If I was able to, for some reason, double my portfolio, so all the other things held constant, right now I have $50,000. If I was, able to double that and my current income, would be actually 4,000, or at some point once it gets up to 4,000, not 40, 4, 1, 2, 3, $4,000. So for someone who's like has twice as many investments as me, but a similar portfolio performance, let's say their dividend growth rate is 5%, and they're currently making $4,000 per year, then 30 years from now, just those stocks that they have now are basically going to yield them $17,000 per year. Again, not including reinvesting all those dividends, which is going to make this number quite a lot bigger, and also any future investments into dividend yielding stocks that are basically going to increase your annual income as well. So anyways, I think I'm rambling a bit now. If you actually picked, for example, say you had all your stocks in TD or something and you've got a higher growth rate, I think we were saying it was around, figured it was around 9%. If you had a 9%, then you're just going to have an even more massive dividend growth rate. That's actually crazy. If you just put in, enough stocks into TD right now so that you'd be earning $4,000 per year, which is probably around $100,000 right now, you could do nothing else. You could even take all of those dividends every year. Like you could keep your $4,000 and not reinvest it. You could just spend it on whatever you want. And still 30 years from now, you would have a passive income of $53,000 per year, even though you didn't reinvest the dividends. So that's kind of the point of dividend growth and why it's an important aspect to consider, especially if you're investing for the long term and really thinking of retirement. So anyways, guys, I hope this video helps, and if you're interested in trying to play with some of these numbers, hopefully that calculation was easy enough for you to follow along. If not, go back and just check out and see how I did it. And yeah, leave a comment down below and let me know, is dividend growth something that you prioritize, or are you more about high cash flow or just straight up growth stocks? I'd love to hear what your guys' opinions are, and yeah, I'll see you in the comments, and I'll see you in the next one.